for your time. Good to have you with us here as always on Profit.
Always.
Dilip, where do you stand on the market? It's a non-stop kind of a move. Halts and stops are very short. It's like a non-stop express train. You know, the corrections are shallow and bought into quickly.
So Prashant, you're absolutely right. I think it's something like one is at a crossroad. What really is happening is that the initial rise, most of us really missed out. And you know, because a lot of people remain skeptic, it was only the FIs who really pumped in the money. And now market having come so far, I think now the question is how far more, you know. And now that the markets are completely polarized in their opinion that Mr. Modi is going to come with a majority, which is what the market is expecting. So in a sense, the margin of safety as we go forward towards the counting day, it has become virtually zero. So there is very little margin of safety. So in a run-up to that, I would really be a little more cautious, a little more defensive. So if the index hovers around 6,800 to 7,000, I think I would be tempted to take profits and keep cash of at least 30-35% and wait for the election results to pan out. If the results really pan out the way we are thinking, then possibly even after that for 1.5 months, the markets will remain at elevated levels and may even move northwards, because post the election of one leader, there is going to be a budget. So a lot of hopes will depend on the budget, and that also will drive the markets. So I would say an investor should be a little more cautious and participate if required a little on the higher side post the elections, where we feel that if the results are on the expected lines, then one can still participate. But otherwise, I think as we all know that if this does not happen, markets will correct seriously, and then there will be an opportunity to buy.
So now you're saying if you're still not in, wait for the post-election outcome dip. That's what you're saying, Dilip, basically?
What I'm trying to say is that you must then participate post-elections. If the markets are up because the results are moved on the expected line, then you can participate maybe 5% higher. So you'll get an opportunity even then, because even as what I just said, that post-elections also for 1.5 month market should remain under the expectations of the first union budget of the new government and the new leader. So a lot of hopes will be there, which will drive the markets, I believe, decisively northwards during that time. And if this event does not happen, then in any case you will be able to participate on the lower side and buy at the dips.
Right. So is it also an opportunity, by the same logic, if you've gotten earlier, is it also an opportunity to take profits? If you are the trading kind?
Absolutely. Yeah. Absolutely. As what I would say, out of 100 rupees of investment, I would take profits, and I would sit on out of 100 rupees, I would sit on a cash of around 30-35 rupees for something to materialize in case of a dip. Otherwise, participate slightly at a higher level too.
Right. You know, I was talking to Madhav Dhar yesterday, Dilip, and he's just sort of taking a line out of what he wrote sometime earlier, a few months back. There's an article he wrote. He said in India, the inevitable never happens. It's always the unexpected. Right? I've heard from many that we'll see this post May 16th dip, which will be bought into. It won't be that severe. So it's almost on autopilot now, right? I mean, actually,
exactly.
Just today, you are, I think, the third or the fourth market participant to tell me that. So this is what is likely to happen. So the view is kind of converging to this autopilot kind of trajectory. That, well, market won't correct now. Post May 16th, there will be some dip. That week might see correction, but then people will come back in very strongly. What are the chances that comes true, Dilip, with everybody sort of betting on that possibility?
Well, I think thing is very clear, that the markets are simply or significantly ahead of the fundamentals. And I refuse to buy any argument which says that, okay, post elections, if some decisive government comes, I think the economy will just move out of the doldrums. I think this index is discounting an event and not the fundamentals. So that's why one has to remain cautious, because there's too much of optimism that has got built into this particular expectation, and which in my opinion is unrealistic, given the fact that the world around us still continues to be a very tentative place. There are a lot of apprehension, growth seems to be collapsing, and things continue to be very bad, and there are a lot of headwinds around. So India cannot just blossom like an oasis in the desert. So I remain firmly of the view that markets are really discounting an event and not the fundamentals, and that's why one has to remain extremely on the toes, cautious, and try to book profits wherever they can, and not try to get euphoric by the way the indices are moving.
What are the names where you would take profits now, Dilip?
So I was just telling somebody else that the way the FIs have put in money, they have played it very smartly, very cleverly. They have put all their money in the very liquid space. So banking sector is one where they invested heavily. They invested in some of the capital goods names. So we have seen, and they invested something, say, something like in Reliance or somewhere in the PSU sector. So I would be very tempted to take profit in most of this. I think in banking, I would definitely book at least 25-30% of the profits, because there the asset quality improvement is still a distant event. And the core business, whether it's the credit growth or the NII growth or the NIMs, they still have to come back, and I don't think that anybody is in a hurry to get that particular thing back, and nobody is even talking about it. So the way the banking stocks have moved, I would be a little more careful, and I would certainly book profits. And similarly, even in the capital good names, capital goods sector and the stocks, I would certainly look to book profits. And I would like to shift somewhere from here, maybe to IT and maybe back to pharma.
Right. Anything right now which looks really tempting, which looks really attractive, Dilip? To buy, not to take profits, yeah.
Yeah, sure. On a selective basis, I would still look at Larsen and Toubro. I think that's a stock which is probably there for all the seasons, because they have the best balance sheet. And in spite and despite all the problems that the India is facing, or if there is a revival, whichever way you look at it, I think Larsen Toubro remains the best company to capture all these opportunities. So that's a stock which one should have in the core portfolio. I think apart from that, I would still go for something like a Sun Pharma, or maybe an Aurobindo Pharma, or maybe in the tech sector something like a Wipro, which is quite beaten down, TCS. Maybe in the second rung name something like an Emphasis or NIT Technologies. So or United Phosphorus. So these are some of the few names which I think probably are defensive and may be able to weather even if there is an adverse correction in the market. Probably these stocks are a lot more defensive at the moment.
Dilip, it's a pleasure. Thanks very much for coming on. Great chatting with you. Thanks for your time today. Dilip Bhat at Prabhudas Lilladher there with his thoughts on the market. Let's take a quick break right now. We are back in 2. When we return, I think Sarvendra Srivastav should be with us. 6823 on the Nifty right now. That's basically about 5 odd points higher. So not very much. It's exactly there. Almost glued to that number. Back in 2 with Sarvendra.
Market Check, brought to you by